Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Christmas Eve, the 24th. I don't know. Maybe I shouldn't be streaming today because the liquidity is likely to be pretty light and everything. But we still got this stimulus thing going on, and I'm gonna wake up early anyways. But I think that we can use this opportunity maybe for a little bit of research and programming if nothing's going on. So yeah, hey, good morning, Winston. How is it going? So let's just go and look at the charts because we did have some very interesting action yesterday. So, you know. Again, on, what was it, Tuesday night, we found out that Donald Trump was going to veto the stimulus. Which, of course, caused the markets quite a bit of distress. But they decided to shake it off, perhaps because they felt that Congress will overrule him, or they'll add in $1,000 stimulus checks, which is good for the market, or who knows. Anyways, they moved up, but then at the close, and I mean this was literally at the close, they dumped everything that they had, which I was kind of looking at it like, well, if they're gonna pump it into the close, they're probably, you want to buy it right here. But then I heard some negative headlines about how there were, it's not going to be so simple in the Congress. So I thought, well, maybe it's a sell, and then, of course, they sold it into the close. So that's kind of where that leaves us. Note, though, that Treasuries did not see a similar move. So it really was probably more day traders just dumping positions over in the equities. They did not go into any kind of light of safety into Treasuries, which continues to be a thing. Treasuries move, but not based on flight to safety. Not much in oil. Oil did have a good day yesterday, though. Here we go. Gold. Copper. Copper also holding this area. Come over to the daily charts. And just kind of note that things are really kind of slowing down here. And the dollar back above 90 again. So they haven't been able to undo this really sharp move up that we had at the beginning of the week. And I still hear stuff about Brexit. So Brexit, it sounds like the no deal scenario is not going to happen, but they haven't actually concluded and finished it all up. Apparently there's going to be a news conference later today, so that's going on. But, yeah, so here, Uzi says, I'm surprised you're streaming, probably going to be a snorefest. No, I mean, probably. So here's the thing, I still wake up, so I'm not quite ready to be doing all my stuff. Next week, I'm going to be trying to prepare, record some videos, do some writing, and maybe even some reading. But today, I think we could do a little bit of programming. But the thing is that because we've got Brexit still kind of outstanding and the stimulus still outstanding, I think that there's a good chance of a move. I don't know if it will happen today. It might be next week, but we may get more action during this time period than you would normally expect. On the other hand, because of the dump that they made into the close yesterday, that does kind of signal to me that not very many people are expecting to participate today, right? We could do something more fun. Well, yeah, we could do whatever we want. So check this out. I changed something. Here, wait, let me show you. I will. Okay. I'm going to do something. You tell me if you notice anything different. Eh? 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 Did you notice? Did you notice a difference? Huh? So I went and I finally I was starting to get sick and tired of how much the microphone picks up the keyboard and the mouse and me bumping the table. So I went and I got like a big wad of cotton batting for a blanket and put it underneath of the stand so that it's disconnected from the table. And now you don't hear the loud thud when I'm typing. Was good, right? All right, or wait, I'll do it again. Huh? It's better. If you changed your pants, we can't see them. Actually, now that I think about it, you might not. Oh, no, I'm always wearing pants. Oh, I'm always wearing pants. Here, let's turn on the Texas speech here.
Uzi Knesset says dogs asterisk. Uzi Knesset says well hey, on the home front, our digs finally got a hold of our yard mole after 3 long years lol.
Oh, really? Oh, that's good, I guess. I tell you, moles are such an interesting thing because you look at it and it's like, how does it do that? But then you never see it, so you're like, is it actually like, you know? Every time that when my mom
Uzi
had them,
Knesset
I was
says
like,
I fed that sumbitch to my alligator sniping turtle lol.
Oh, really? Oh, man. Okay, so I think we should do some programming. You guys got any cool ideas? So here's the thing. I've been doing a couple of different strategies. They're kind of more on the order flow side of
Uzi
things.
Knesset says sorry. I know it's weird, gross, but it's been a long time coming.
No, I like
Public
it.
Space says is
Yes,
this
it
live
is.
now?
It is live now, Public Space. You can tell because there's a little thing down at the bottom that says live. And if you you can actually kind of view the stream kind of delayed a little bit and then catch back up by pressing the live button. Anyways, I've been doing some programming. I found some good edges, especially with my kind of doing my inventory cost basis indicator on short time frames. I've been able to find a place where when there's a short-term drop, you get a good chance of it going for you. And you know, it was like 55% win rate, but it was good. I was happy with it. It works better on shorts. So I've been looking for strategies that are more likely to do well on longs in the S&P 500.
Winston's mom says yes. Public Space and good morning. Speculator Seth is live every morning during when the markets are open. He says he will live stream at 0715, but it's usually around 0723 my time when he begins speaking.
I'm supposed to start at least at 7:20. It used to be 7:15 because that's when the treasuries start, but I keep being late. I spend more time reading the news before I come in, and that's why I end up being a little bit late. Anyways, so I tried one thing yesterday that was based on volatility. And that worked pretty well. And I was looking for something to run, you know. I was looking for something that I could catch it and I could catch like a really good swing trade. And it did. It worked really well, I felt. But I would like to diversify that a little bit. So that one was kind of based a little bit more on volatility. So now I'm thinking maybe rotation, some sort of rotation pick. So the way that I'm doing this is I'm thinking, you know, today's not a very good example. How about up in here? I'm thinking that I'm a large institution and I want to come in and I'm buying. And so I'm going to try and do it in a way that impacts the market the least. So if I buy some here, I'm going to do most of my buying here in the first. So the way that it works, I can't even remember the name of the algorithm. There's different ways of doing it. One way is, you look at where the VWAP is, and if it's below the VWAP, you buy it, right? That's old. There's newer ways of doing it, and one way that they have done it is they've shown that you kind of want to do like a reverse. So if this is like if this is like a graph, and this is time, and this is the number of contracts that I trade at any time, and I have a certain, like, let's say that I need to trade this many contracts, then what I will do is at first I will do like half of it, and then it's kind of like a decreasing function like this. Actually, it's like this. It's a curve like this, right? So I'm going to do most of my contracts here at the start, and then I'm going to wait a little bit for the market to recover from that, and then I'm going to do less and less and less. Because as I do that, my impact on the market is remembered, and so they would do less and less so that their net impact on the market is minimized. So I'm thinking that when you're buying, they're going to be sneaky about it. It's gonna be when it's down here, there's gonna be no warning. It's gonna be slow, maybe really vague and confusing, right? So when you look at this action right here, it's a little confusing, right? It's kind of a little bit all over the place. So that's where I was thinking, okay, so what we want to do is we want to wait for a contraction in the volatility, and then that's the spot where they're probably going to buy it again, right? But I think that there's another spot to it, and that is that this function is based on time, and so we should be able to just pick up on an oscillation and be able to pick the right spot, right? But the big thing is that you don't want to do it when you see the volume, because as soon as you see them do the thing, you've missed the trade already, right? That or finding the time that they're going to do this initial one, right? Because that's the one that we would really like to take advantage of. I've been reading that an animal urine like bear urine can be bought online, and this deters predators and squirrels who wipe out your bird feeders. Well, yeah, I figured that. Or they build it synthetically. I bet that's a thing too. Anyways, so I think I had some indicators here from Euler. I'm trying to remember. One of them was like an angular. What was it called? Correlation angle. That's right. Okay, that was the one that wasn't very useful because it was like it determines the current rotation, I guess, and that doesn't necessarily match up. What was the other one? There was a different one. Oh, what was it? I wrote something for that one. Oh, it was some sort of Fourier something. Fourier something or other. Fourier series analysis. Remove. I'll have it plot this rock here as well. Okay. Now, let me see here. When I did this Fourier strat. Oh, I did set it up to do it with different time series. So I tried this one. I tried testing this one, and it was break even. Uh-oh, what is going on here from Jake Sherman? Trump, as he has many times before, has thrown the government he is supposed to be leading into an intractable crisis. We spoke to a few people in touch with the president, and they say this. He has come to think that this fight he has pitched, teasing a veto on the COVID funding bill that the administration negotiated, is playing well with Americans, these people said. I believe that's probably true. Trump believes he is highlighting what he considers to be wasteful foreign spending, never mind he proposed much of it, and is pushing for $2,000 checks in place of $600 checks in his underlings and party agreed to. But here's what won't play well with the base. The social safety net our country is supposed to provide is about to be ripped away in the middle of the holiday season. On Saturday, pandemic unemployment assistance used by gig workers runs out. On December 31st, pandemic emergency unemployment compensation, which lengthened unemployment, runs out, as does the eviction moratorium and the medical expense deduction. All gone unexpectedly unless the president signs the $2 trillion package. On all the legislative battles Trump has pitched, this is the most dangerous and befuddling. Here's what's on deck. There's uncertainty about whether he will sign the COVID bus package to avoid a government shutdown next week. If Trump doesn't sign it, how will they avoid a government shutdown Monday night? Will he sign anything? Speaker Nancy Pelosi will force a Monday full House up or down vote on $2,000 checks. Will Republicans vote for it? Because we know Senate Majority Leader Mitch McConnell and Senate Republicans are likely to ignore it. Really. Will Congress be able to override Trump's NDAA veto in his final INTVW? In his final interview in 1973, Lyndon Baines Johnson told Walter Cronkite that the antagonizing Congress is never a good idea because it's like a pilot having a co-pilot flying in different directions. Trump has taken it a step further. He has pressed the ejection seat on his allies. He's publicly turned on McConnell and John Thune, the two top Republicans in the Senate. The only ally he has left in leadership is Kevin McCarthy, who sent a letter to House Republicans last night criticizing a deal he was a party to and voted for. McConnell, who was elected a few weeks ago with his largest margin in 18 years, has practically no political incentive to pacify Trump at this point. If worse comes to worse, he'll have a better hand in a few weeks with Joe Biden in the White House. Biden's a Democrat, but at least you know his administration's word is likely to be good. As we said Wednesday, pretty much all of the president's allies recognize this fit is mostly about Trump's frustration with lawmakers who have been publicly acknowledging his time in the White House is drawing to a close. Trump's remaining allies, all in the House, are convincing Trump that he has a chance of overturning the electoral results on January 6th and that he should veto this bill, both deep rabbit holes without exit pass. Oh my gosh. Do we really think... I'm really surprised that there's still people living that one. The hope in some corners of the Capitol is that House and Senate come back on Monday. House will be, but who knows if the Senate will be back, and they pass a stopgap to keep the government funded into January. But why would the president sign that if it truly has little to do with policy? Right now, Republicans tell us they have one goal: keep Trump calm and hope he changes his mind and signs the bill. Here's what's going to happen today. Democrats, likely House Majority Leaders Steny Hoyer, are going to offer the $2,000 check bill on the floor. That will be blocked by Republicans. Republicans are going to offer to strip all of the foreign money out of the bill they just passed and replace it with a stopgap measure. Democrats will block that. We'll be back at square one. This Congress started shutdown, and it could end shutdown. In between, we've had an impeachment and a once-in-a-lifetime pandemic. Oh, that's right. Okay. Just in case there was not a whole lot new in there, but a lot more color about what different people are perhaps thinking, or at least of what close confidence think that people are thinking. But yeah. There was talk that the president will not return to the White House after the holidays. Look for the golden ratio. There you go. I should take it when it passes 1.618 instead of when it passes 1, right? There you go. Well, so I programmed this up. I will show you the code here for this one. I'm just doing a basic for just the basic indicator, and I'm looking for it to cross a certain threshold, back and forth. And, well, I will analyze this again because I didn't save the results, and I will show you how it does. There are people who will not get paid, yeah, probably, but it wouldn't be the first time that we've had a shutdown. And kind of the problem with a shutdown that I see is that we've discovered that a government shutdown isn't actually the end of the world. So, backtest and Fourier strat. And we should do an optimization. We should do the period from 5 to let's actually do from 5 to 120 with 5 period increments on the ES. Just this year, include commissions, run. I bet you that it's going to come out that the 20 is the best, though. And while I'm waiting for that, I'm going to come over here to... How old are you? I am 35. I'm old enough that I have to think about it. So I'm looking over here on lizard indicators. Oscillators, channel indicators. Okay. Oh, that wasn't very good. .16% winners. And that is with set winners and losers. Yes, it is. Of 8. But the 10 period apparently did the best, which is interesting. Actually, it did not. When you look at the total, 120 period did the best. The higher periods did the best. Probably because they took less trades. But this 10 period had the highest percent profitable. So the question is, if this is an oscillator, ooh, I know. We should do it when we should combine it with MACD. What do you think? Wait, do I have just like a straight MACD strategy? I don't think I've straight up tested that. I've tested like my own variations of MACD combined with other things, but I don't think that I've ever done just a straight MACD. So let's start there. MACD strat. Else if state equals state dot data loaded. My MACD equals MACD, and then I get fast, slow, and smooth. Always do walk forward? No, that's not. Well, I mean, here's the thing. How will you do that? So, like, I could make like 1,000 different strategies, and to really walk something forward, I would have to like go and like, run it on sim for a month or whatever the deal is, right? So I think that it's better to come in with a certain theory about the way that the market works, program something up. If it's good, then you should get something right away. And I think that you will actually find that when I do these, if I have a good idea, I actually am able to get it profitable just with the naive implementation. And then I can kind of optimize it a little bit on a data set and test it against multiple data sets to ensure that I am not curve fitting. And then I will walk it forward, right? Because walking forward is a pretty big investment of our resources, essentially. How's it going, Big Toasty? So we'll do a back test, see if the back test even says that something's any good, and then the micro futures are awesome. Yes, they are. Okay, so we're going to need to have some. We're going to need 3 of these. Public int fast get set. Public int slow get set. Public int smooth get set. All right. And up here, fast should be, well, let's go with slow equals 50, smooth equals 1, right? And then I forget. Bring this down a little bit. When we come onto our chart here, MACD. Oh, they use 12 and 26. Well, I'm going to use 10 and 50. Oh, 9? Okay, well, just see with what I've got there. Okay, good deal. So we want to see it crossing above 0, right? Hank Smith's brother, John Smith. I've never heard of him. Nope. Go to KSL. Go to the local news. It's not even on there yet. Okay, so let's try it like, so I think that the MACD, well, you want to do it when it's crossing 0, right? Isn't there supposed to be 2 lines on here? Right? MACD, average, and diff. Maybe it's because my smooth is not smoothed enough. Let's see. So let's do smoothing 10 maybe. Okay. So the signal is when MACD crosses above average. That's the naive signal at least, right? Okay, so if cross above my MACD dot MACD of not of 0, comma, crosses above my MACD dot average, right? That's one signal. Enter long. Enter short. And then I think that we should have stops and everything, yeah? And we'll make this a double here. Double public double reward factor. Stop equals 16. Reward factor equals 1. And then in configure, we're going to put here set stop loss stop, right? Because there's 2 here. Oh yeah, we have to do calculation mode. Calculation mode dot ticks, comma, stop, semicolon. And then this one is set profit target. That's right. And then this is stop times reward factor. Da, 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 da. Need MIT stops. I vaguely know what you're talking about here. Hold on a second. I'm trying to remember what the MIT order does. Oh, what is it? I mean, I see there's the thing, but moment it touches. MIT order is alternative for limit order, but goes to market. I don't know. Market if touched. Order allows the order to be submitted at market once the price is touched. This order is similar to a stop order, except the buy and sell actions are reversed. For instance, a buy MIT order is submitted below market, where a buy stop would be submitted above market. Oh, okay, yeah. They're saying if I were to come in here, and put it right there, it would become a market order if this is touched, but it wouldn't be sitting in the queue as a limit order. Does that make sense? We can implement those sorts of things. I find that if you just do the enter long and enter short stuff to begin with, that gives you a good idea of kind of what it does. And then you can do more fancy stuff later, right? Like trying to manage, I don't know, because the issue when you do those sorts of things is you don't necessarily get the price that you want, and there's differences in how it's going to behave based on what order fill resolution you're using and things like that. Whereas this, it's just is going to give us like the open of that bar. Correct. I mostly use MIT. A fast market will push through the limit order and not execute. Gotcha. Okay. Anyways, so I think that should do it. Oh, yes. We need to do in the last 0 bars or whatever it is. Is it that you can do? I always forget if 0 is or 1. I think it's 0 though. And series. Int. What am I missing? Is one of these not actually a series? Oh, it is not. So there's AVG. Well, I think that I'm going to have to go and look at the indicator. Well, this will be good if you're new for how you figure this sort of stuff out, isn't it? We come down here to properties. There's average. It's called defaults. See, how would you ever know that? How would you ever know that? MACD dot default? Okay. Actually, you know what? I maybe I can just do it like that. I bet you that's the way that they intend you to do it, huh? Enter short on backtest, keeping opening new order if the condition is true, even if set max open order to only 1. I'm not sure what you're saying there. But let's come back over here and MACD strat. And I guess we'll just run it that way for starters. And just run a simple backtest on it like that. Let's make sure it takes trades. Well, that did not take any trades. Where is my ninja script? Okay. Doesn't look like it actually took anything. So maybe it is, maybe it does need to be 1. Maybe I'm silly. Okay. There we go. Okay. So 0.87 was with the Final Fantasy tune. So when I run some of these backtests, it takes like 30 minutes. So what I do is I leave my computer speakers on, I start the backtest, and then when it's done, I hear that sound. So I wanted to pick a sound that, you know, lasted a few seconds so that I would be sure to hear it when I'm in the next room. So that's why you hear that. I think it's fun, yeah. We can turn, it's probably a little loud for you guys on stream, isn't it? So we can turn the desktop audio down like that. Okay. Now there's the other thing is that we can say when the diff crosses 0, right? So here's what I'm going to do. I'm going to copy this. I'm going to comment it out. We'll just use the same strategy here. But we will say here, my MACD dot diff and 0. That in a 30-minute backtest feels like winning a battle, yeah. I tell you what, man, replaying those tick replay things is like a real pain. They were talking about a different platform on NinjaTrader for backtesting. They claimed that it did that stuff and you could export the data from NinjaTrader, but it was a lot faster. I should probably check that out, but okay, so now let's try it with the diff line. Oh, wait. So let's make sure I got this. Sometimes I get this thing where you see like this one right here. It's like, why did that last one go to 0 now that that I ran it? Oh, no, wait. That one was 0. Sometimes, though, I'll get one where it's 0 and it shouldn't be. Okay. Oh, you know what? Let's remove all of these ones that are non-pinned. Okay. Bum, 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 ba-dum. And we'll run this one again. Oh, wait, did I not build it? I don't think I actually built the strat because... Oh, wait, maybe the diff is the same thing. Maybe I'm being stupid. These cross at the same time. I see. Then what is it? It's when... Is it when the MACD crosses 0? I think it's like when the MACD crosses 0, huh? When do you find taking trade on close has a better edge? So here's the thing. How do I explain this? So say I have a bar like this. I have a bar like this. Okay. And I have like a 16 tick stop. And this is like 4 ticks. But then you get a bar that's like this, right? And this bar is like 24 ticks, right? You don't know what goes on inside of this bar, right? So in order to do something a little bit less, to really know what's going to happen, you have to change the resolution. So that means either running this on second bars or loading second bars underneath to see that it went like this inside of it or whatever, right? But that means loading more data takes longer for it to run and so forth. So if you set up your strategy to run on close and to really be based off of that time frame of bar that you've got, like a 1-minute bar, for instance, it makes your life a lot easier in backtesting because then you know that. So if you do it that way, it's much more likely to behave the way that you expect it to when you trade it live or when you run it on sim or whatever it is, right? So that's the biggest thing. And it requires less data, it backtests faster, etc., etc., etc. So what I would recommend is if you really want to do those extra things, like managing the orders in a specific way, you can do those, but I would make sure that you actually have something that's worth putting that effort into. So do the naive approach, get something that works good, then, run that a little bit, make sure that that works the way that you expect it to. Because it will take orders when it says, but you might realize, oh, hey, I didn't really want it to take an order there, though. I think I should change this. I should change this. Then when you got something really good like that and you really want it to be automated, then you can start looking at things like it taking trades intrabar and managing the orders and things like that. All right. Anyways. Okay, let's try that. Okay. So the cross of the MACD line is better. Interesting that with my stop, that it crosses that line more often than I would like. Okay. So the reason that that's happening is it's going long and then it says, oh, okay, and now I've got a short signal, I'm flipping. So something that we can do to fix that, if we want it to really hold our risk and everything, is we can say market position position dot market position equals market position dot flat. Now it will literally only take a trade if we're not in a position, so it will be ignored if we're already long, essentially. Can you share this code later? I could, but one, the piece of code that we've got right here, I don't expect to be too good. And two, it's pretty simple piece of code. You should be able to just type it out. But I can post it. Let's try that one. So you see it actually increased the percent profitable by quite a bit because it's letting them go all the way. 0.94. So a profit factor anywhere in 0.9 is workable, right? Now, I believe that when you're just using that MACD, that's really just the cross of a 10 SMA, right? That one would be there, right there, right? How many bars is that? Okay, well, so if we're saying the oscillation, so we can use the period as the look back. Fault filter by volume spike. Okay, so back up. Let me explain the thing here. So we're looking at a strategy where a large fund wants to go long. What they do is they try and minimize their impact on the market. So if, say that you need to do all of this, right, and you hit it all at once, right, then what's going to happen is the market's really going to see that, and it's going to have a big impact on the market. And especially if that amount is much larger than the amount of liquidity that is out there, then you're really not going to get a very efficient fill, right? So they don't do that. They don't like to do that. So instead what they do is they split it up, and they'll say they'll do it like half, and then, oops, don't do it like that. Do it like, they'll do half, and then that, and that, and it's like an exponentially. So you get this curve like this, right? So when the volume hits, it's already too late, right? So what we're trying to do is we're trying to pick a spot where we believe the bias is long and the oscillation says that things have calmed down. So we're going to pick it in a kind of a nonchalant spot, right? Now, one way to do this is like with Bollinger bands and the Bollinger band, like, you know, coming in. I've already done a little bit with that. So now I'm trying to do it with this Fourier series analysis. So when I do the Fourier series analysis, it's okay. But I think that we need something else to help us. I guess we could do it on volume. Well, let's just try this first. I know that this is just a cross of the moving average, but so I want to say that bit and this bit right here. And for this, I'm going to say 10. Because it could have happened quite a few back, right? So then we're going to copy a bunch of stuff over. Oops. There we go. This is what we wanted. I guess we don't need that period bit because I want them to be the same. So that would just be fast. Okay, I'm just hearing on the news squawk that the bill failed in the House as it was expected. Oh, I already kind of had something like that, but we'll put that in there. And this bit right here. And this bit right here. So don't expect this to really do all that great, but... What is output? Oh, it must be this thing right here must output something. Okay. Good morning, Ace. How are you? Ah, it did make money. What did I have? Oh, I didn't include commission. Hold on. Okay, that's okay. I don't necessarily care about the short trades. Now here's the real test about this, because the thing that I really care about is that if I go up to 10, Reward factor of 10 and increment them by 1 and run that. Oh, hey, bots, how's it going? I got something for you to try, by the way. But it's top secret. So it does say I can get a reward factor of 5. Yeah. I'm doing good. I mean, trading action has been kind of sucky, but finding some things. I'll give you a preview, though. The idea was this. Let's try going for a higher reward factor. Let's try something where we win 20% of the time and we make 5 times what we risk when we do it. And so I tried a couple of different things, and I was primarily interested in taking the longs. And yeah, so I found one that did pretty okay. And you can see here, this one, I don't know, a profit factor of 1.2 and a Sharpe ratio of 0.5 off of just some, in this case, a Fourier series and a MACD is pretty good. Can we hear bots? He can, if he wants to message me, we could bring him on. Sure. Really, if any of you guys want to, we can come in. I guess what we could do is we could go into the Discord chat. Hold on a second here. Don't I have a second? Yeah, I do. Let's see here though. Do I have the? I think I have the permissions set to be nobody can speak there. Yeah. So here, how about this? I'll go into the stream voice channel. There we go. And then if you want, I'll mute myself over there too. And then if you would like to talk, you can come over there. Okay, what does this strat use again? So here is the piece, here is the code. So it is using an indicator called a Fourier series analysis, which I downloaded off of the NinjaTrader user share and was created by Euler. And it is these two indicators right here. So it is basically looking for the MACD to cross a 0 line and the Fourier series to be in a good spot. So it waits, you know, it like it'll come right here and then it'll say, okay, so here's an appropriate spot. And then have we crossed that 0 line recently? And then it will go. And that'll take it. And we're looking for them to run. So the strategy here is, again, let me walk you through because a couple of you guys just came in. Pelosi talking right now. So there are different, if you are a really big player and you want to buy a bunch of something and you want to buy like let's say you want to buy 10,000 future contracts of ES, for instance, you can't do that without moving the market, and you want to reduce your impact on the market as much as possible. So what do? You split the orders, and this is most likely from the research that we've done, although it's probably a little bit of other things too, but this is probably the most significant reason for why markets have autocorrelation, which is to say that if I see a buy right now and then I go a couple hours in the future, I'm, 0.5% more likely to see a buy order that far into the future. Why is that? Because they're still buying, essentially. So what they do is they try and reduce their impact and have a minimum impact on the market. And the way that they do that is there's a kind of a little algorithm that they use. Now, if all other things being equal with the algorithm, then the algorithm says to do something like this: trade half of it at the beginning, and then as you trade it, because as you trade it, the longer you do this, the more autocorrelation there's going to be. So the further on you get, the less you can trade. So they trade the most here at the beginning and the least here at the end. Now that changes depending on how much risk you want the system to take and whether or not you think that there is a skew to that particular market. But the basic gist of that is this: if we want to take advantage of those people that are buying, then if I come in and I wait for a big buy to come into the market, I've already missed it, right? So I don't want to wait for the volume or the momentum or anything like that. I want to go and I want to catch when it's low and there's not a whole lot going on. And that's going to take a little bit of discretionary. I'm going to have to come in here and say, I think because of the fundamentals that they're going to buy today, right? So that's why I'm trying to use the oscillations of the market to try and find an optimal buy location. And then when I do find an optimal buy location, I want it to run. I want it to run. All right. So that's the general idea. And that's why here on this one, I'm testing for really, really far reward factors, right? So now I can do a reward factor of 5. And look, I make money. I don't think that's the most. Oh, actually, it is the most you make. It's a lot of chop on that chart. That was just yesterday. It's just yesterday. When you really zoom in on it, it doesn't look as bad, but that was the open. But you're right. All I know is when volumes come after a big flush positions during, they liquidated it. Yeah, and that's the other thing, is that this kind of thing explains why you're going to see what you do. Because if you believe that the market is really heavily skewed, then you really want to just get rid of as much as you can right away. So that's why markets tend to fall faster than they do tend to go up, because you're getting bad news and everybody's trying to get out as quickly as possible. Whereas when it goes up, they're trying to affect the market as little as possible and trying to be sneaky about it. Except for certain situations where they screw up and then, they get caught, which I think we may also be able to find, but I'm going to have to think about that one a lot more. Heiken Ashi candles. So there are some issues with backtesting Heiken Ashi candles, so we could get into. Isn't it because it's mainly an internal indicator that it's showing good results? No. In fact, I think that you're going to find that if you take any one individual indicator in NinjaTrader and write up a simple strategy for it and backtest it, that it won't work. And in fact, you can see here, well, actually, we did it with 1-to-1. Where's the reward factor of 1? The reward factor is the last thing. Okay, here's a reward factor of 1. So here with a reward factor of 1, it's slightly profitable. You can see that because of the buys, we make a little bit there. Now, the other thing that I was interested in is that really for this trade, yeah, I thought so. But it is still profitable on the short side, interestingly enough. So it doesn't help us to get rid of the short trades on that. That's interesting. I think what I could say, well, let's try it. Let's try this. Right here. We're going to get rid of this part right here that forces it to take its thing, and we're going to say, if you get the opposite signal, get out. But we're only going to enter into longs. So let's just remember that this was making... oh, why is it not in cache? The code for Fourier, you're going to have to... So I'll show you where to find it. You go to NinjaTrader NinjaTraderEcosystem.com/user app share. And then I typed in Euler, actually, is what I look for. And then, oh, actually, you know what? I don't actually, maybe I didn't get it off of the user app share. Oh, how come it doesn't sort them very well? It should sort them by date added. There you go. Fourier series analysis right there. Here, I'll even copy the link over to you. There you go. Commissions included. I believe they were. Sometimes when you change some things, it will like not include the commission bit. Oh my gosh, now I forget what I was doing. I did compile that, right? Alibaba, yeah. Alibaba is being taken to court in China for anti-competitive practices, apparently. Yeah, that link is for the shitty indicator, the Fourier series analysis. Okay, so we come back over here. I want it in currency is what I want. Okay, so let's just remember that this made 12,000 on the long side. Now let's run it again and see if that improved the long side. I think that it may actually cut it short, so we'll see. I'm like, it shouldn't be taking that long. Okay, we're good. Okay. Didn't really change anything. Didn't really change anything. 12,980. And this one was, what was it again? It actually did improve the long by teeny tiny bit. Are you familiar with the theory of Brownian noise? So I'm certainly am what do I want? The word familiar. The word familiar is probably not a good word. I've certainly heard of it, but it's not something that I have investigated yet. Add it to the list. But I know that a lot of this has to do with that. If you assume that the market is Brownian noise, then what is the optimal strategy to use in the X situation? How much are you risking? So in this situation, I am telling it to use a straight stop of 16 ticks. So you're risking essentially $20 on a micro. So $1,000 or $100 a month on a micro contract. It's not terrible. You can smooth out your charts. Oh yeah, what's that? That sound is the sound that, yeah. Oh, Madi already said it. It's Final Fantasy is an RPG, and when you defeat all of the way an RPG works is you're this little character, and you walk around the map, and then you'll randomly have an encounter, and the screen will go, and then it will go into the battle. And then it's a turn-based system where your characters attack the bad guy. And then when you kill the bad guy, you win, and all of the characters go like this, and you hear that sound, and that is the victory. That is the Final Fantasy victory theme. And the whole thing with Final Fantasy was that this guy, Final Fantasy was actually all based off of an artist. Basically, they said, here's this artist, we really like his art, and so we're going to make a game for him. And so he drew all of these beautiful paintings of these characters, and then they turned them into these little 8-bit monstrosities. but everything about it was from this artist. So they've made like 12 Final Fantasy games since, but they use the same music and art style for all of them because it was all based off of this guy's art style was the thing. Anyways, let's come back and Control Z all those changes that we made so that we still have the short side. Now, one other thing that we can try doing here that I think will be interesting to try is I'm noticing that based on how far the S&P 500 goes, you're unlikely to get more than 5-1. So these ones where they took more. So here's one where it took 8, for instance. It took 8 times risk. So when I come down into here and I say, what was the average winner and average loser? It should be, close to 1,000. Or what the ratio to the average win to average loss should be equal to 8, because that's what we're going for. But what happens is so many of them end up taking the close that it doesn't get that. So if we take off the break at end of day, I don't know if I compiled that. But if we take that break at end of day and we turn it into like a real swing strategy, I wonder how that changes. Well, so far they're buying. They've got to get all the way up to 36.94 to get back to where they were before they careened down yesterday. Yeah, it did. Oh, no, actually... Huh. So when it come down into here, oh no, it actually didn't improve it. That is interesting. How many years did it take to learn how to program? Well, I mean, I have a computer science degree, so and that took me a good 4 or 5 years to finish. No, it wasn't 12K for a month. It was 12K over the whole year. Anyways. Oh, and Blunt was saying add Bollinger Bands maybe later. I think we should finish with this first. You want to try it with the other MACD change? With this one? Oh, wait, that was the one that we just tested. Let's try it with this one. Let's try the moving average cross. So this one is the short. And this one is the long. I don't know why I have them backwards on this one, but okay. Taking a while to compile there. Okay. Mm-mm-mm-mm. Hold on a second. Okay, Brexit negotiators have finalized a trade deal being retweeted by FX Macro first. That might have already been priced in, but maybe some of this up movement that we've had from the open is from that. I don't know, but we'll just kind of let that one run and see if we get something. How accurate is the backtest on NinjaTrader? So it kind of depends on you. So one of the issues that I've seen is that you can kind of do some things and kind of cheat the simulator. And a lot of the time people want to go in and immediately recreate the way that they enter their orders and everything else like that. But if you're doing it where the strategy does its calculation on the bar close and then it makes its decision, that tends to be pretty accurate. Now, there's another issue, though, and that is that past performance is not indicative of future results. So I was reading this article yesterday about Quantopian. And, of course, I think many of you have heard about how Quantopian shut down. And I think that one of the big things is that the data that they provided just wasn't very good. But it was deeper than that. And then Robinhood bought them out, but they bought them out basically so that they could take all of their engineers. They're not using any of the business at all. They weren't interested in any of it at all. Well, why is that? Because past performance is not indicative of future results. So what was happening on Quantopian is you would see this strategy that was doing really well for the year, and so those were the ones that everybody was looking at, but then it wouldn't work going forward. And they did all sorts of research and stuff to try and determine how they could figure out whether or not something will work into the future or not. And they simply couldn't do it. And the reality is that the only way that you can know if something's going to work into the future or not is if you actually understand what the edge that it's taking advantage of, right? Then you know that it's not how curve fit it is and everything. So I know I'm looking for a specific type of move, right? And this type of move is going to do pretty well over this past year. But I know why it's doing well this year. And, I can decide when I want to trade that strategy or when not to trade that strategy based on what the market is doing. Notice there will be no trader bite today. The day action is slow and not conducive to good R factors, so opting to rest up and enjoy the family, says Futures Trader 71. Okay, gotcha. Hoyer says he's going to talk to Pelosi and Dems about how to avoid a shutdown on Monday. He says Pelosi is talking to Mnuchin, but to what end? Mnuchin doesn't always have Trump's proxy. No one has a clue what Trump is up to. Yeah, right. This totally is like, man. How is Jim Simmons making 40% a year? I don't know. Oh, because of sugar daddy is saying because Kwans are dumb. Well, no, I think the issue is that if you are trying to sell something and the whole website is based on showing people your past performance or your theoretical performance, then the best strategy in that situation would be to, curve fit it. And I hope that people buy it when it was curve fitted, even though it has zero chance of working in the future. Okay, I never ran this today. So let's run this. I definitely compiled it, though. Trading is making love to other people. Quants are geek retards. They want to apply a mathematical formula to make love with women. No, I think that there are some really, really useful quantitative trades, but I just think that the way that retail traders tend to do things severely misapply it. So the cross of the MACD was good, but the cross of oh man. So when I'm just doing the MACD line, it's okay, but when I'm doing the two lines crossing over each other, it doesn't work very well. Although this top one with an equal risk reward does give a pretty good percent profitable. 54% is actually quite high, which suggests to me that it is doing well. But I think in this situation, what's happening is it's so lagged. Yeah, it's just like way too lagged. So like, what if for fast we used 5, and for slow we used like 10. So their only edge is HFT. Well, no. So So there's a couple of different levels of this. I think one of the things that I think is kind of confusing or misleads people is people think people have different ideas of what quantitative trading is, right? We could say that quantitative trading is anything where we just using numbers. That one is, well, it's okay on longs, but that one is not too great either. So if I am doing like what we're doing is what we call indicator soup. Okay, so if we're doing indicator soup, there's two things that can happen. One that can happen is that edge will just be arbitraged out of the market if it's a really consistent one. Or two, it will be an edge that changes based on what the market is. And if you know the correct market to trade it in, then you can switch between strategies. But it's very, very difficult to know what kind of market we're in and which strategy to actually use. Okay. The next side of it is a very, very large portion of quantitative trading that happens at the hedge fund level has more to do with your portfolio makeup than it does technical indicators and things like that, right? So that's the next step. Another step is what high frequency trading does, and that is nothing like technical indicators, but it's still a lot of math and algorithmic stuff, right? So like there's all these different levels of quantitative trading, and then we look at it and we say that, well, what I'm doing with a bunch of indicators on the screen is the same thing as quant trading. It's like kind of not. That's not typically how the big funds do it. Blend says, black out the news. Completely disagree. I took this trade here 100% based off of something that I heard on the Squawk. And that's the thing is this strategy that I got here, well, so that didn't work very well, did it? But if we come back, let's set it back up to what, well, we'll just show you the results from the one that tested well. This was basically based on looking for a spot that most technical traders aren't going to find anything interesting about. That's really kind of what the trade that we're going for here, right? Is I'm looking for it to be low and be in a spot that people aren't going to be interested in. So. Good technicians can pick up major changes in trend. So there has been a research paper that has been quite popular, and they've even already written books about it, where they do there's this big system thing that they pass the swings into to determine what kind of a regime we're in. And it's interesting. I haven't actually done it yet, but that's one of the things that I'm hoping to be able to get into over the Christmas holiday. How many times you said squawk and market moves don't make sense? Well, I think in this instance that it's enough for us to get a little bit of a movement. I don't know. I'm not so sure that I'm going to be able to make 50 off of this like that, but we'll see. We'll see. Link to the paper? I would have to go and search for it, to be honest with you. It was fairly, actually, you know what? I think I can search for it because it was fairly recent. This was interesting. Anything that has to do with a Hawk's process is good for market making. This is basically saying where should you put your best bid and ask based off of how many orders could potentially come in at any one instance based off of like average volume. Okay. I don't know if I can find it. I'm trying to remember. Oh, here it is. Markovian. So you're going to find a bunch of papers about this, but just search for Markov. Search for scholarly articles about Markov. Okay. Anyways. Oops. It looks to me like they're maybe a little bit too long already off of the open for the Brexit thing to be making an impact. Also, probably a lot of the Brexit was already priced in. So I don't think that taking this was like awful, but or not necessarily should be expecting a ton off of it. I'm just going to let it ride just to see what happens, but we're not really seriously trading it right now anyways, right? I wonder why it takes so long. Well, I guess because we have the stream going, it might be slowing down the compilation. Okay. Something that I find interesting is there's quantitative approaches to news too. Like they'll come in and they have quantitative ways of quantifying what the news is and then seeing what the reaction off of it is. Okay. So using the HMA there wasn't as good, but I'm bet you that I could get it to go better if I... No. Yeah, I want to use this. Cross below, close my HMA fast. That's what I want. They probably have an algo for Trump tweets as well, yeah. Although I'm a little distrustful of the Twitter robots, to be honest. But what I do think is useful is like run back analysis, you know, quantify what a trade is after the fact, look at the market impact, do the study about what kinds of things will cause it to move or not. And then when you're there, you can do that same kind of analysis in your head, and you'll know what kinds of headlines to trade and which kinds not to. So it might come out that the final announcement of the trade deal is maybe not a very good trade because there were already so many trades before that that would have canceled that out, you know. Now I'm like, why are those taking so long? Well, if we're going to do 1,000 iterations, that might be a problem, huh? You know, let's abort this. Prolonged wealth, good morning. Okay. That should only give us 100 or so. Actually, 20 or so, right? Oh, no, 100. Yeah. All this stuff is over here. Math is outdated and AI is too redundant. Well, I bet you that the robots are probably going to make more money than you would. I'm just saying. Seems to me that the robots make money and that the retail traders don't. So I wonder why it's taking as long as it is when I'm doing the back test. Because that, what I added in there shouldn't really be that hard. Oh, you know what? I got this totally wrong backwards. Well, this should be interesting. This isn't actually what I wanted. I feel sleepy all of a sudden. Educate yourself in technicals. Well, but that's the funny thing is that when we come in here and you look, all of these technical strategies that I always see people sharing on forums and stuff don't work. In fact, I'm going to bet you we'll take this, we'll get this one we'll optimize this one. And then we'll try running it on a further back period. And I bet you that we're going to find periods where it does really awful. You're saying a bunch of stuff that has. So here's the thing. You say that theory of trading doesn't avail itself to math, reductionism, efficiency. Provide empirical evidence that that is true. Because I have some empirical evidence in the form of a number of studies that show that day traders trying to trade off of indicators don't make money. That traders trying to trade off of their feel don't make money. That day traders in general don't make money. MPs will want to see the detail, but absolutely no sign of Labour blocking the deal here, whether you want a Brexit or not. The long, drawn-out, and highly polarizing arguments of the past 4.5 years are almost over. That is until the retrospective arguments begin, I'm sure, yeah. Yeah, but can you prove that you can? I mean, show me some empirical evidence that X thing does. Or rather, like, it's really easy to say all these things fail, because I mean most things will fail, and all of the evidence that we have is that like 95% of people that work. So then you say, well, X thing works, and then okay, so how do you know that? What is the empirical evidence that you have that X thing works? Tesla had 0 technicals this year when it ran up 1,000%. Yeah. Well, you could trade it based off of fundamentals, the fundamental being that it's a cult stock, right? So I don't know why this should not take as long to test 116 iterations. I'm not sure why it's being so much slower now. But I must just be low on memory and okay. Oh, hey. I bet it's the 50 too, huh? Oh, it was a 6. But you know why? It's because I had it backwards. Now, the other thing, though, is that it really should only be trying to implement this one thing. Should only be doing 100 and... See, like, that's the only thing that's being optimized. I don't get what's... This is so weird. Well, so let's just do this. Let's take the MACD out, because I don't know if that shouldn't make a difference, but it could potentially. This is a little bit more memory, I guess, but... Oh, you know what? It's because it's incrementing by 1. That's why. Durr. Okay. They're doing their Brexit conference now. Press conference. You can't teach people to be good. I'm hearing a lot of, but not a lot of empirical evidence. It sounds to me like what you're trying to do is you're trying to justify your own personal beliefs that you don't actually have any evidence to back up. The belief being that because you're smart or great, that you can be good at trading when most people will fail. Hmm. Had a little boo-boo here. Okay. Saying to be a good trader, you need more nuance than any mathematical system can handle. Okay, so prove that. I mean, here's the thing. The market definitely does reward like nuance. Like it's going to reward the thing that the market has largely ignored, but ends up mattering a lot. And if you can pick up on that thing, then that can be beneficial. It seems to me, though, that you're more likely to be able to pick up on those things if you have a really sophisticated model. I think that just the idea that you can look at it and know where it's going, and but here I'm just saying, like, okay, so what makes you think that you can do that? I don't know. We found a couple of robots that at least backtested look pretty good. This one should be a little bit better. No, it didn't. That didn't help at all. Very, very interesting. So this one back here was the best, huh? So let's see here. Let's just go back. It was this one right here, right? So it was an optimization. Okay, so that's the way that we had the indicator before. We could try a bunch of different things. I don't know, but the MACD worked okay. And in fact, I'm actually surprised that I didn't think that I would be able to get this far with MACD. So let's do some crazy. We'll go from 5 to 120. Increment by 5. And the slow from 5 to 120. Increment by 5. How many is that? Is that going to give us like 10,000? I might have to stop this. I wish that it would show you how many. 5,760 isn't bad. I don't know if my machine can handle that memory requirement though on that. Yeah. Hold on. So if we're going to do that, I need to have, let's see here. What is it called? Include, I was just using it the other day. Where is it? Now, it was up in one of these ones, like... There we go. Include trade history and backtest faults. And come to this chart. How much smoothing can you get away with? How little smoothing can you get away with, rather? Okay. Ugh. Okay, I think that what I'm going to do is I'm just going to only take these up to 50. Five. Include commission, run that one. It should be a little bit more reasonable. It'll probably still be in the thousands, right? Yep. Oh, okay, 1,000. 1,000 is fine. That's weird. MACD is usually a lagging indicator. Well, yeah, it is. I mean, that's why it was like, But the thing is that we're actually lagging, right? Like what's happening is you have this right here, and MACD will say, okay, you can get in here, but then my other thing says, no, you can't get in until you're here. And then these two things have to be close enough, and it takes that. Right? If that makes sense. Well, training like what you're doing now, you're backtesting strategies that you don't even believe in and you don't even believe you got. Well, so what I'm doing is I have a particular thing about the way the markets work that I know happens, that I'm trying to design a strategy to specifically take advantage of. And I know when they're going to use that thing and when they're not. So I know when to use this strategy and when not to. Right? I think the place where you're going to run into issues is when you go in and you say, I'm going to use moving averages, and you just kind of do this soup and you have some algorithm put as many different combinations of technical indicators together as it can come up with, and then that's going to be your edge. And that is a problem because you don't understand how it works. So when you look at results, you don't even really know why it's getting the results that it is and how likely they are to continue into the future. But if you know, okay, this was the kind of market that we had, and here's the strategy, and the strategy did well because it exploited that market like this, then I can do the analysis of, okay, so now we're in this kind of a market, so that will apply to this market, so I want to trade this. 9 out of 10 profitable traders are algorithmic. Do you have empirical evidence to back that up? Oh, wrong title on today's thing. Yeah, let's fix that. Do you have empirical evidence for that claim? I wonder if that means that yesterday's is bad too. Seems this Fourier series analysis indicator prints stuff out to the console. It's kind of interesting, but do you care about the why of stocks going up or down? Yeah. But there's one thing about, I know that, so here's the thing, is that I could come in and I could know. So here's an example. Let's back up a second. How many here think that the S&P 500 will be higher 6 months from today than it is today? I'm going to bet, based off of the market surveys that we've been seeing and the way that the market has been going and everything, that a majority of you will say that it will be higher. So if we just assume that the market is going to go higher, then Chris says higher. Okay. So you know that the S&P 500 is going to go higher. That doesn't mean that you're going to be able to make money off of it scalping it. Right? So how do you take advantage of that? And that's where we test things. Is we come in and we say, okay, we're looking at a market that's moving higher, primarily off of central bank stimulus and monetary stimulus as well. And potentially recovery from the coronavirus may be helping the markets too. But there's also some risks coming out, right? We know what the risks are. For instance, one risk is moratorium on evictions ends and people get kicked out of their homes, and that really hurts the economy. Right? That's one example, right? Okay, so now we know what the expected action is and the risks are. Now we can go back and we can say, okay, what are some strategies that would actually take advantage of those conditions? Okay, so if it's going to be going up off of central bank stimulus, then really what we want to do is buy the dip, right? So we're going to find some strategies that buy the dip, and we're going to go back to a time period when this was happening, like this year. We think that what we've had this year will continue into next year, or we could go back and we could look at like 2010, right, around that time, and we could test it on that, and we can see how well does this particular strategy exploit that action, right? Now you actually stand a chance because you have a theory about how the markets are going to go, and you have empirical evidence that shows that trading in that particular condition using this particular strategy does well. Do you see where I'm going? Bitcoin to the moon or not? I'm really concerned about Bitcoin. I'm surprised that the whole Ripple thing. I'm surprised that the whole Ripple thing didn't affect the larger cryptocurrency market, and I would be concerned about other shoes dropping. Where are they right now, by the way? They gave back what they gained yesterday, and they actually formed a new low too. Oh, it's not my first 10 euros. Thank you, Anthony. So Anthony will come in every 2 months or so to check up on what we're thinking about Bitcoin, and he'll come in and give us donations. So here's that. Actually, one time somebody gave us $100. That was something else. But Anthony's been a great long-time viewer. Thank you very much, Anthony, for coming by the way. Yeah, I haven't run the indicator today, but by the way, if you haven't checked it out, I would check out Monday's post, because I kind of improved the model a little bit. I just made it a little bit more granular. So once you see it a little bit more granular, you can see that there was a point during the last peak that it actually was more overvalued than it is now, but they're awfully close. They're awfully close. So we'll see where it goes, but I still expect that sometime in the next 6 months, I don't know, if we're really charitable, maybe we could give it a year, that Bitcoin is probably going to have another severe crash. So Seth, you're too friendly. I appreciate your patience. Yeah. Well, I mean, here's the thing is you got to think about what is the reason for streaming, right? Because honestly, if I have an edge and I'm making a ton of money, it would make more sense to just trade it and not tell anybody and not let anybody know, lest there be any chance that they figure it out and try to take advantage of it. You know what I mean? Well, number one, I not always do well. My pleasure sounds like more cryptos will follow XRP. I think so. I mean, the thing that you got to remember with XRP is like what is the complaint? And the complaint is that they're trading it like a security and that they're basically printing money. And I think that as time goes along and people figure out that that's what they're doing, really destroys the argument for owning cryptocurrencies right now. So anyways, back to the point of doing the stream. So what are the benefits that we get? Well, I get to talk to a lot of people. I get to work with a lot of traders. I get to see a lot of people, how they're doing things, what sort of things tend to be successful, don't be successful, and collaborate with them and help them develop their strategies and then be able to look at that and incorporate them myself. That's an advantage that I get from being on the stream, right? And also being able to look back at my past performance and analyzing it and having a stream of successful traders, right? So when I have people come in, to me, the thing that I'm the proudest at and the thing that I like the most about this stream has been that we have been able to attract a number of very successful traders, right? Ace Trades, there you go. Ace Trades a good example. Bot's a good example, although I met Bots before the stream, but these are two people that I know have had periods of profitability. Wow, Marty, thank you very much, man. Give this to Travis and let him trade it for you. Well, we're gonna keep trying him. I think that we're gonna keep trying those robots as they are until the end of January. So I didn't really take a whole lot of trades last week. Anyways, we've attracted a lot of profitable traders because, and part of that has been because we know what the audience is. The audience is that we're looking for profitable traders. And I don't have any problem going in and saying, well, the majority of things fail. What kind of evidence do we have that this works or that works? And being extremely skeptical about it and admitting that what we're trying to do is really hard and admitting that when we're pulling edge out of the market that we're looking for a very, very small amount of edge. You know what I mean? So that also kind of the split side of that is that if somebody comes in and is an idiot, it doesn't particularly bother me because they're not my audience, and in most cases they just go away. You know what I mean? And if they don't, or they start to become disruptive, then I just ban them, and there's no problem with that. You know, like I don't have to worry. Like that's the thing that's so cool is like you get all of this advantage of streaming, but you don't have to be a popular stream. Right? So this is really great. I'm also happy for Seth. He worked hard for it. Thanks, Chick. Thanks, guys. The edge in trading is having a plan and sticking with it. Well, having a plan and sticking with it, I would consider base. So the difference between edge and base is base can get you to break even. Edge makes you better than everybody else. I think that to even stand a chance, you do have to have a plan, and you have to be able to execute on that plan well. But you also have to have an actual inefficiency in the market that you're exploiting. You know what I mean? Seth, could you highlight the step in the profile in Jigsaw? Could you program that? So a couple of weeks ago, we were programming something that was a step in the profile, and I was really close to having it. I had a little bug in there. It ended up being a lot more complicated than I wanted it to be. I could try going back and doing a more naive approach that would work, but it would be a lot more computationally expensive. But I think I'm going to actually, maybe I really should just do that. I don't know. Anyway, I was trying to have it calculate on each change, and because otherwise you have to go through the whole thing and iterate. And I don't know if I want to do it that way, but I was trying to have it calculate as she went. But I'm definitely going to go back and finish that still, because at some point I am going to want to try test some longer term edges. But for the time being, I'm getting into more specific intraday setups that I'm interested in at Podmo. I feel like Seth would be a better YouTuber than a trader. Trading, not a social and sharing business, is more like tear people apart and exploit them business. Well, so the thing is with a retail trader, just remember that you're not really competing with the other retail traders, right? You're really competing with the hedge funds and the robots, the hedgers, basically. So I would not be even 1/10 of as good at trading as I am now, and I still think that I've got a long ways to go, mind you. But without, the community and stuff and people being able to talk to and bounce ideas and all that stuff off of me, right? Retail makes me liquidity when they panic. So yeah. And on that split side, I'm not sure if I'm super great at it, because I do go and look at some other channels that, now some of them, they get the views by doing some kind of shady things that I don't think are appropriate, like making certain kinds of claims and stuff. But there's other ones that just don't do anything and they do well. So you kind of have to wonder if there's just a certain amount of people that just don't like me, which is okay and would be expected. I've never considered myself a likable person. In fact, I've kind of made quite a bit of my living from not being a likable person. So I don't know. Ace says, I don't just like you, I love you real. Oh, thank you so much, Ace. We're gonna get this freaking vaccine thing out of the way, and then we'll have some barbecues, man. Ditto, Ace. And John too. If there's anybody I consider, I mean, I've told him this before, but if there's anybody I consider a mentor, it's Bots. And I know, like, it's a good example. Like, Bots has told me about periods where he's done really well. Like, he's showed me like the whole months of stats. There was this one month that he showed me that I was just totally blown away at how well he was doing with it. But I don't think it continued. And he's shown me other times when he just did terrible, But he's somebody that I know that he had a period for a really long time that he did well. And Ace as well. But you don't always do well, Stop victimizing yourself again. No, I mean, like, a lot of the jobs that I've done have been, like being the check on people. So that I've been valued in businesses for my ability to be an independent thinker, essentially. So by ending the pandemic, are you suggesting people buy hot dog stocks? Is there? We have to do a little bit of a research. Is there any stock that is hot dog stock? Is there a stock that specializes in hot dogs? Nathan's Famous Hot Dogs. Oh my gosh, you've got to be kidding me, right? Is that what they are? Is that what they are? They're a hot dog stock? Nathan's Famous Hot Dogs and Restaurants, the stock. It's 54. Okay, NATH. Let's go and look at it on a better way of looking at things. Let's just go to Yahoo Finance, because I know what to look for over there. Statistics. Okay, it's got a market cap of 230 million, price earnings ratio of 19.23, trailing. Oh, it won't tell us what the PEG ratio is. Has a very, very low beta. Oh my, that is a really, really low beta. But that probably means that it hasn't been doing super great recently, huh? Yeah. Wait. We need to go like 5 years. Let's look at 5 years. Yeah. Oh yeah, it hasn't been doing well ever since the 5 years. Well, we'll have to look at that. I'm not recommending that you buy this stock though, no. $32 stock soon. Pandemic won't help it. I don't know. I would have to go and look at the fundamentals of it, but I don't think, like, the thing about this is that, yeah, you would expect it to actually do slightly better pandemic wise, and it got creamed. So, because that's more of like a consumer staple, but probably because it's, you know, famous hot dogs and restaurants, probably the restaurant portion of it is probably a more significant. So it's probably not really a consumer staple, huh? But I don't know anything about it. What's your yearly performance? Oh, I don't even want to think about it. I made some big mistakes this year. I tell you straight up, I lost money over the year, for sure. Probably if I combined all of my investments together, then I have made money. Actually by quite a bit. But if you look at my scalping in futures, I had a really bad year. And it was kind of like I had some periods that were like super, super awesome, but I often didn't take very much risk on those. And then when I was like, felt like I was good to go and I was taking on a little bit of risk, I would make big mistakes and I blew it. So my broker had a great year for commissions. Yeah, my broker probably made a good amount of money off of me. But there was some days where I just took way too many trades. There was one day, so we had two boo-boos I'll describe. One boo-boo was that I had switched my DOM and did not realize that I had switched it to the ES instead of the micro ES. So I took a trade on the ES and lost on that trade. So that was the first boo-boo that kind of prevented me from being able to trade going into the pandemic itself, which really sucked, but was probably for the best in the March at least. After that, I probably could have done okay, but, you know, I was doing a lot of strategy searching and stuff during them anyways. And then later in the year, I was doing really, really well. So I started trading again and I did well at first. And then I had one day where I just went off on it, you know, like it was a bad day. So I stopped trading it. And then after I stopped trading it, I was kind of worried, like, because usually what'll happen is I'll stop trading it and then it'll be like, oh, these are the perfect conditions. Why aren't I trading it anymore? But since then, the election and then the action that we've had post-election hasn't really been that good. hasn't really been that good. So I thought that maybe I was going to do some trading in December, but I decided not to, just because it hasn't been doing great. Seth does his best trading when he's not talking, probably. Right now, we're waiting on this backtest to finish. Apparently, it's going to take another 30 minutes. Probably would go faster, but I think that we're using almost all of our CPU right now, so... I think that it's so funny that, so first of all, Matt, Watts, and Cardinal Cash are all copying me. That's like, to be frank with you, that's how I feel about it. I've been doing this for 3 years. Cardinal Cash has only been doing it for like 6 months. And I don't have anything against any of those guys, by the way, either. But Brian Watts and Cardinal Cash in particular are way more about the entertainment value of it, don't you think? Another thing is, all three of them that you will go and look at them, their losers are much larger than their winners. So like the way that you do this is you take a really big stop and a really small target, and then it looks like you're winning most of the time. And then when you do lose, it's just that one day and everybody forgets about it. So Matt being a good example where he has made combines and blown them several times. Nice rally developing here in ES. Yeah, I do have a long on, but here's the funny thing is that the strategy here is to buy the dip and then leave it alone. So this trade that I'm starting to take the far extreme. So this was the thing that if you talk to me after this, John, I'll show you this strategy that I found that took advantage of it really well. But the gist of it is this: I'm starting to lean towards taking really big reward ratios. And my goal is 5. I want to take a trade where I win 25% of the time, but my winners are 5 times my losers. That's my goal here. And I think that a lot of the time I was kind of doing that anyways, because I certainly have caught runners before, haven't I? But the reason I did that was because I was going through some of my strategies and I found that like when I did 1-to-1 that it was okay, but that when I did that same setup and I did 5-to-1, it did amazing. Well, it didn't do amazing. And in fact, many times it would decrease the Sharpe ratio of it in particular, but the total amount that it made was much more. And so I kind of realized that, okay, if you really want to make enough where it's actually like an amount that makes a difference, you're much better off trying to take the big runners. So I have moved my back testing more towards looking for trades that are 5-to-1. And that's why you notice here that I do the back test. I'm doing it with a profit factor of 5 right now. Matt never posts his losing streams. I've seen videos from him that are negative. Maybe he does it live too, doesn't he? Maybe he makes really bad videos private. I don't know. I just know that like anybody else, he doesn't always do amazing. Bull bear zone. I would sell my worst losing videos. Yeah, I mean, I've had some bad days. It takes guts to say you had a bad year and respect that. Well, it's not just like, here's the thing, is that if your whole basis is I'm this brilliant trader and you should all be paying me money so that you can get my secret inside strategy or that I'll be a mentor to you and all of this, then of course you would have an incentive. And even if you weren't doing this intentionally, you would basically try and make it seem like you were always winning, right? But that's not my goal. I started this channel just so that I could look back at my trades and watch how certain order flow came about, right? I kept doing it because we attracted some good traders and we got some good collaboration going on here. So for me, if I make a mistake and I lie about it, does that help me? It doesn't. In fact, if I lie about it, I'm actually kind of hurting the biggest edge that I have, which is the community that we have here, right? So yeah, I have to be honest with people. And it's important to note that the bad year was largely because of like basically 2 or 3 days. So, oh wow. Sugar Daddy says that he saw one where he put 14 contracts on and thought it was going to reverse and it didn't. Wow. I saw a day the other day where he said he lost 8,000, which was larger than any of the winning days that he had around that time by about double. I'm certain that if you look at his look at his P&L, it's going to be like this, and you get douche, and it's going to be like this, and douche. And whether or not these peaks are getting higher or not, who knows? Because we don't actually see his data, but I guess the only thing that I can tell you about the YouTube is like if you're looking to find somebody on YouTube that is the guru and is going to be the one that's going to teach you that one thing that you needed to know to be a successful trader, you're not going to find them on YouTube. In fact, YouTube is probably the worst place to look. But if you're looking for a community of people or that are consistent traders that are here every day, that have been trading for years, and some that have had very successful time periods, and you're just looking for that camaraderie with other traders and collaboration with other traders, then this is the best place. Yeah. Blunt says, so you need a tool to help you stay in a good trade longer and to tell you when to exit prior to reversal, regardless of time frame. Well, so most of the testing that I do is based largely on getting good entries. One of the things is that I haven't been sure enough about the entries to really take much of them further. I did have one that I really, really liked, and so then I started to look at, okay, what are like continuation signals and stuff? But whenever I tried doing those sorts of things, it didn't help. But maybe that was because I didn't really have the really good reward ratio. So perhaps now that I have a reward ratio, I can go in and I can say, okay, so here's something that's really bad that happens that then I do want to get out. And that will keep most of these break even or whatever. And then, we might be able to make a lot more off of this. And also managing the position, like that if we get equal risk reward or double risk reward and then move the risk up to break even at the very least, there's probably a number of things that we can do on these that we can kind of improve it. But for now, the first thing is just finding trades that have a higher probability of running. But Tesla just ran 1%? Really? Jeez. They crazy over there, man. You heard Cardinal Cash was a fraud. I don't know. Like here's the thing that is, do they make claims? Okay. Do they claim, I've made X $1,000 this year and when they haven't? Or do they claim that they made money this year when they haven't? Right? Like that's what the raging bull guys were doing, right? They said, oh, we're these stock gurus and we're always making money, when the reality was that they were losing money pretty much every year. Right? Wu says turtle strategy. Yeah, I guess it's a turtle strategy. This one that I took on the trade that I'm long in, I probably should have taken it up here. Maybe I should have a limit order up there. Or maybe, frankly, I could have just taken the 10 at one point, but we'll see what happens. He was trading on a demo account. Well, I trade on a demo account a lot too. You know, the funny thing is I have this like the stinger that says real, but you know, that was at the time that I made it, I was always trading live, but then since then I've reduced the risk. Trading statistically, the F50 SMA has a 94 to 96% successful price movement when coupled to the what is the MOBO band breakout. I've never heard of that. Let's see if that's something built into NinjaTrader or something. Now, I believe you that a 50 SMA would have something, because in a lot of the backtesting that I've done, the 50 period seems to work best for whatever the reason is. This was posted in Stocks and Commodities magazine. Matt is making $1,500 to $2,000 a month. No, probably not. Let's see here. I could tell you how much he's probably making. Wait, first I have to log in. Yes, that's right. Actually, he's probably making a little bit less than $1,000 a month off of YouTube. Plus, he had a few sponsors. Yeah, I'm sure that he could make money from the sponsorships. I wonder how many people he actually gets to try the combine and makes from the affiliate revenue. I mean, so if you buy Jigsaw, I have an affiliate link for Jigsaw, and I have it in a video. I've made some money off of that. I'm not gonna lie. Okay, so we were talking about MOBO. Does MOBO stand for something? Make like a 120 broadcast. Oh, I didn't realize that you stream for a long while. Yeah, I mean, that's about what I do, something like that. Every video makes like $1. Money flow oscillator, moving average ribbon. No, don't see it. No, there you go. It pays for 1 micro commission. Add Bollinger Bands. I have a Bollinger Band on one of my charts. I have one on my upper. And move this. I have one on the upper right one. This is kind of dark gray, so they're kind of hard. They might be hard for you to see. Change settings to 10 and 0.8? Really? Is that what this MOBO is? Momentum breakout? Are you talking about a Bollinger Band momentum breakout setup? Yeah, it's backtesting. It's using almost everything, and it's encoding the stream too. Can you believe that we haven't dropped any frames due to encoding lag? Blunt Fort Wenty says yes. Ah, okay. I've already looked at that actually. So let me show you something. Cool indicator. I just really, every time that I start digging into these, I find something else that I like. Library indicators, all indicators. So this guy Lizard, he's built like everything under the sun, and they're all slightly advanced, and so he has a squeeze. He has a squeeze here, and his squeeze actually tells you whether if you have a Bollinger Band squeeze, a Keltner squeeze, or a combination squeeze. And it has inside of it a signal line and everything, so you can build a strategy off of it. Interesting, though, that you say use a 10-minute moving average and a 0.8 standard deviation. That is interesting to me. If I was not already backtesting this right here, we would go and try it. I don't think that this is going to be finished before we're done, though. You're saying like, here, I'll add it. I'll add it. I think Seth is aces squeeze. No, this aces is really a momentum continuation setup. Lizard indicators. And then he has the squeeze channel. You say statistically the 50 SMA has a 94 to 96% rollout successful. Oh, it did go right over my head. I think Seth is aces squeeze, and you're using squeeze as like the person they're like, I get you. Okay, so you were saying mid-band period 10, and we'll say the offset will be 10 too. And you're saying this one do 0.8. Do a 0.8. I'll leave the ATR multiplier the same. Now they have a normalization period. Do you deal with that? Or maybe the normalization period should be at 50? We'll try that. Oh, yeah, that's right. So then Seth is reading your comments worse than a robot. Yep, sorry. I'm surprised that it's only 8:50 my time. So I have it set up to do both at the moment, but we can come in and we can just do Bollinger Band squeeze, right? Okay. So necessarily expect to get a ton of them over here. I forget what it does. Oh yeah, right here. It gives you these arrows when it's long or short. Oh, you can't see the screen, sorry. Over here. So here's what the indicator looks like. It draws the bands around them, and you get these dots when it's squeezing. And then if you get enough of a squeeze, it gives you a signal. And it draws these arrows where the signal is. And I've backtested that, and it worked well for runners. But I would ask, so 2 questions for Blunt. Is one, how do you incorporate the 50 SMA? Well, he's giving us specifics. I mean, he's giving us a pretty damn specific setup. I would have to test it for myself before I would believe him. But just him giving it, just when somebody gives you something that specific, you kind of have to go, okay. Screen for setup. So are you saying you're using the SMA as a filter, so you only take it long if you're above the 50 SMA and short if you're below the 50 SMA? Is that what you mean? Oh wait, so that he gets the chance to like really answer. We're getting close to finishing our backtest. One says off any major average. Well, we can backtest this one, Ace. We can backtest it. How did Demetrius Rotter and Singh make money what they do using nothing? Well, so let's talk Rotter, for instance. It's curious to me that Paul Rotter lives in Singapore now. It seems to me that they made money during a time when you could really take advantage of the book and take advantage of some of the robots too. And things have developed to the point where those things don't necessarily work in our markets anymore. And so they have moved to other countries so that they can take advantage of less mature markets. That's what it seems to me that Rotter does or is doing right now. So the deeper and deeper I go into this, the more that it seems to me that you probably could have done pretty damn good just watching the DOM 10 years ago, but that the robots have made it harder. Live Action says, yes, that's the reason. Well, there you go. Which means, by the way, that being able to read the order flow still matters. It's just that we'll probably need a slightly more sophisticated approach, right? As a side note, if I wanted to learn C++, what's the end-all be-all course? Oh man, I don't know for C++. I'm sure there's tons of people on YouTube, but man, C++ is really one where you have to learn. So that's one where I would probably buy a book, and I guess it kind of depends on how you learn. I don't know. I learned programming from university, and the thing that I find so interesting about the computer industry right now is that there's a lot of people going, oh yeah, just go to a coding camp and you can make just as much money and all these things. But I look at some of the things that these people come out knowing from the coding camps, and they don't know a lot. It's not the same thing. It's not a replacement. And so, look what happened on February 21st. You broke the lower moving MOBO, and you broke the 50 and 320 days, so the market was telling you it was fed. Okay. Well, let's take these bands off, and let's just put on a regular Bollinger band here for a second. And let me see if I understand your setup correctly, because I think I do. I think what you're saying is, hold on a second. Ramov. Bollinger. 0.8 deviation, period of 10, and then you have an SMA on here of 10. So we would say, oh, where's the 10-minute SMA? Or the 50 SMA? Oh, that's, I put an SMA of 10 when it should be 50. Whoops. Whoops. There we go. So you're saying that I want to see price come below outside of my Bollinger Bands and cross my SMA, be below my SMA, and then I'm going to take it short. So like right there, right? That's what you're saying, Blent, yeah? So if you do that, then if that is the setup, then the next question would be, what's the exit? Do you just take a set stop and target? And if you do, then what's the stop and target that you take? You saying 94% makes me think, okay, he must be taking like a really wide stop on it. That was nav flash order somewhere. Notice that M formation on the top line of the MOBO? Sure. You mean like this right here? Our backtest is almost done. March 24th, the MOBO. Yeah, but hold on a second. Let's finish this, and then maybe I'll try programming up what I think you're saying. In fact, I might have one. Let's see here. So this is the one that does like everything, right? Yep. And this is the one. Nope. Yeah, okay. No, I guess I didn't make one. Or maybe I made it and I didn't like save it as a strategy, so we're gonna do this. Bollinger break. I hope it's done. Interesting. So, oh, now wait, we changed, I see. So it actually was able to get a higher profit factor off of certain setups that were longer. Okay, I need to take a break really quick. I'll be right back, all right? So what happened here was I told it to optimize on the... why is that reward factor of 1? Oh my gosh. So that whole thing was useless anyways. Shit. All right. Well, that was a waste. I'll run it later today. Let's write this thing up, all right? I'm going to do this. I'm going to be like turbo mode, all right? Mm-hmm. 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 Mm-mm. Should probably just make this into like a class that has some of those things built into it. Okay, fair enough. So I'm telling it has to cross the moving average and the Bollinger bands around the same time, right? How can I inbox you? You can send it to Seth, or you can send it to speculatorseth@protonmail.com. Oops. It's a lot of really dumb boo-boos, which is usually the type of mistake I tend to make. I should have gotten water while I was out. You're telling it to do it based off of a longer term strategy. If it's like a longer term thing, I'm not necessarily interested. Oh. So if it is a strategy that holds overnight or for multiple days, you have to show to me that it does more than just makes money, right? Oh, I called it slow. Duh. Oh, he says it's fractal. Well, this is the setup right here, yeah? If it crosses through the bands and it's crossing below the moving average too, and I'm giving it like so that they can cross within 3 bars of each other, then it takes the trade. Yeah? No, we're gonna have to come back to this because I should have optimized this on total net profit and I wanted it to be with a reward factor of 5. Okay. Bollinger break. Commission. All right. Didn't work. .87, in fact. Now hold on. Where am I getting? My winners are larger than my losers. Apparently this happens more often than you would think. If I marry my dog without a prenup, would it claim my trading money in case of a divorce? Probably not. I don't think the law takes those seriously. Interesting. 48. Says 48. I bet you that if I did this. Oh, not even with that, huh? So I either misunderstand your signal or it's not all that. I don't know. Let's try this. 5, 16. Try the other extreme. Nah, way worse. So yeah, that didn't work. Okay, so on this one, what we have to do is we need to go to max profit. Where is it? So like max net profit, yeah. And the reward factor needs to be 5. I know that it's going to take another 30 minutes and you guys won't be able to see the end of it, but the Fourier idea is pretty cool, isn't it? I mean, it's impressive that something that simple that we just wrote here on the stream is able to backtest positively. And even one of them made 25K, in fact. Not very reliable, but hey. Take what you can get. Now, some of these other ones that I've been working on. Just for comparison, we show you all my strategies. Should I show you all of them? some of these I'm able to get my Sharpe ratio high. So there's this one, this is based off of vases with an additional filter on top of it, but it doesn't happen very often, so I think that one is very questionable. These ones are based off of my inventory numbers, so these are pretty good. There's this one that's based off of a volume weighted moving average that just does so amazing, and I just don't get it. I don't trust this one. I haven't been testing that one. Maybe I should test it, but I straight up, I don't believe it. I straight up think that there's something going on here that's wrong. They're giving me a result that's better than it should be. And then you get into Reginald here. Reginald gets almost a 58% profitable with these settings. Makes about $1,000 a month. He hasn't been taking trades, and he's been doing bad since we've been trading it live, though. So, or not live, but on Sim. So I don't know what the deal is there with that one. But you can see these ones, they all have Sharpe ratios over 1. Then pretty okay profit factors. This one, we're able to get the profit factor to 1.27, huh? Right there. So that's not bad on terms of profit factor. It makes you wonder if on some of these, on some of them it doesn't make sense, but maybe, for instance, on Delta, for instance, it would maybe make sense to use the Fourier strat on it with it. What's the win rate on this? On this one, it was 50, right? It was just above 50 with equal risk reward with oh, and then there's the funny was when I did the Bollinger break and I did a 2-to-1 risk reward, it only got 64%, and that needs to be like 80% to make money. So I wanted to tell you to use a VWAP and Gamma together. Okay, what's Gamma? Kaufman's adaptive moving average? Oh, I might have that one. Well, the funny is the one that's like super crazy, right? Is based off of a volume weighted moving average. It's like, what? The VWAP and the Gamma together might be interesting. Although I kind of asked, but then it's like, okay, well, but why Kaufman's? It's all a bunch of math and indicators that work but don't make money. Well, some of these, come on. Some of these, at least when you backtest, do pretty okay. There's VWMA, the thing that's so insane is how many trades it takes and everything. It makes a lot. Now this one right here. I think is going to become another robot. And I really like, but this is kind of where it all started, was I got this one and I was like, okay, because I wanted something that took more trades. This takes more trades. Cool. Takes more trades, but it only takes long. It works so much better on shorts. So then I said, well, I need to find something on the other side that does really well that's on longs. I don't think, though, the one that we got, the two that I've been looking at, this one and the other one, really give us the best setup, you know, like, but maybe I could add the Fourier to the other thing. We'll see. We'll see. Let's see. Try it. But the problem is with the Fourier, it probably will reduce your number of trades, right? And where was it? I have to switch by date. Oh, I got rid of it. That's funny. I'd have to redo it again. Now, here's another one. I don't know if John is still there, if Bots is still there, but I got this one double bottom pivots. So it's when you get a pivot and it causes a double bottom confirmed on the pivots, and you take it. And I was actually able to get this one to work. But the way that I got it to work was really weird. So this is what's so bizarre about it, right? So just to explain to you guys, so we're talking about like you get this and then it comes up and then it comes down and they're exactly equal to each other. And then to confirm it, this bar has to close above the high of this bar, okay? So that's the signal. That's when you enter and you get in, okay? So I said, okay, the stop should be here. If they break that double bottom and then I go long and you try and hold it, right? And I found that if you put your stop there, that you are likely to get stopped out. So instead, what I changed it to is I said, I will make my stop be a multiple of the distance between the close of this bar and this. And it was actually ended up being like 5. I think that the multiple ended up being 5 because this actually ends up being like two ticks in the end. And so I came over here and I said 10 essentially. So if you took a 10 tick stop with like that, and then, you know, you had the targets, and I think I even tried it the other day on trying to let them run. But on this one, it was just 2. So to take it to 20, right? And then that was this strategy right here that made 20K over a year. Isn't that so very interesting? But when I backtested it, it appeared that there was actually a pretty good chance that they would take out that double bottom while you're in the trade. But if you took it, there was still like an edge to it. So that's where this Fourier thing becomes really interesting, right? Because you can come in and you can say, okay, I have a strategy. It works okay. And you got to come over to here when it was actually moving. Or no, more to today when it's actually moving around. Okay. So I can come in and I can say, all right, I got a signal here, but the Fourier doesn't look very good. So I'll wait for the Fourier to come down here. And then, hey, you get a slightly better entry. It's kind of like you get the signal and then you wait for your next best entry on the Fourier. And from what we see so far with this combination on MACD, it actually seems to improve it. Where do you want the Fourier to be? Oh, that's a good question. Because we were doing it off of here. We were saying that it was crossing above or below. Oh, no, wait. This is the Bollinger break one. Here we are. So to enter the short, it's when it crosses below the 3, which means that, so here's the Fourier, right? And here's the 3. When it crosses, this is 3. When it crosses below it right here. So it takes it here. Can you show it on the chart? So, well, no, actually I can't. I don't think it would have taken any today because the impulses weren't strong enough. Because it needs to be 3. Though, oh, actually it does. So right here, if you were going to go for a short, if you're going to go for a long, that's the key here. Well, let's just say that you're using 2. Then it would try here, 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 maybe here. So if we were to use it on a situation like now, you know, you would end up getting something like here instead of something like here. Right? Or that's the theory anyways. I think that we have enough data. I think that we have enough empirical evidence to suggest that there could be something to it, but that it's not definitive. We're going to need to test it quite a bit more and try it with a bunch of different strategies and stuff. Now that I got an idea of what the right way to use it is now, though. So do you have a lives? Not at the moment, no. I've got a couple of strategies that do pretty good that I would like to run, but haven't really been running in December. And I don't know, these two, the ones that I'm the most interested in, haven't taken any trades. I don't know what the deal is with that. I don't know if there's something broken about it or if it's just because of the way things are in December. But yeah. And those I probably am going to go back and change those as well, because I'm basically turning into, I want to have different strategies for long and short. Basically. Kaka, how are you? How are you? Well, unfortunately, I won't be able to finish this. But I think I got you what you guys wanted to know. And I'll just show you here again really quickly. That's the code you need. I guess I need to put it like that. That's basically all you need. Right there on the screen. Is market not closed? Not yet. Closes at the top of the hour, though, doesn't it? I believe. Closes at noon. So we got a Brexit trade. I guess I'll scratch this if it's so kind. I really, you know, given the context of the day and everything, I really should have been taking it when it was up here, right? You look into the VWAP closely, and that the short strategy will be the biggest moneymaker. I don't know. I have some VWAP strategies too. In fact, I've shown you guys some in some of the videos. Like when I talked about moving averages, I showed you guys the VWAP ones. Didn't I? Where is it? Under moving averages. Yeah, here you go. VWAP bounce and VWAP strat. It was very interesting. There's a very high probability of bouncing off of the VWAP, but you make way more money when it goes through. And yeah. So to do the VWAP bounce, I think that you would have to have a lot more in it than just the bounce. Because just a straight bounce doesn't work very well. Oh, I'm out of water. See, now that I want out, they're just going to toy with me all afternoon. That's okay. It doesn't matter. In fact, I'm just going to take that. It was on the sim account anyways. It was on the experimental account, Rosa, right? Yes, it was. So. When it breaks, it goes down hard. Yeah. It's basically a situation where most of the time it happens, but that like 20% of the time that it doesn't happen, it just goes forever. And on short, I'm sure that it would be most especially on short. Study hard and get into Google is faster than this trading thing is hard, yeah. I mean, the thing that you got to realize is that like VWAP is a really great example. VWAP is a thing for a reason, right? Funds use volume-weighted moving averages to determine when they want to buy and sell. There are more sophisticated methods of using it, so maybe it's not as useful as it used to be, but it's a thing for a reason. And so there's going to be a ton of market makers and people out there trying to arbitrage that edge out. And so the chances of that, the VWAP providing you a significant edge on its own right now, pretty much not going to happen, right? But you may be able to go in and find a specific situation or a way of using the VWAP that is extremely uncommon, and you might be able to find an edge. And if you do, that's probably going to be real small. In fact, it'd be better to find something real small. But you'll notice most of the ones that I'm looking at on a full E-mini contract, maybe $1,000 a month, right? Which isn't crazy. My own trading, when I trade the E-mini, when I trade the micro and I do okay, I usually make 300 to 500. So I take a lot more entries than any of my robots do, though. Okay, it's time for me to go. Well, I should call in Christmas Eve backtesting. Or let's just call it backtesting Fourier series analysis. Four. Fourier. Good deal. And by the way, you guys, I think that this is the most number of donations that we've had in this stream. We had 3 people donate, so thank you guys very, very much. Arguing with Sugar Baby. Call it arguing with Sugar Baby. There you go. He's kind of funny. He started out really nice, and now he's started to be more and more combative. But I think that's because I've said some things that he disagrees with. You get that thing where it's like you believe something and you think you can make it, but then you're not making it right now. And how do you square that away, right? Anyways, now Fourier series analysis is going to get more hits from search engines. So, hey, I will see you guys in the new year, right? It will be the 4th. I will see you January 4th. I will still be around. I will be in Discord. So if you want to talk to me, you can hit me up on Discord. You can send emails to speculatorseth@protonmail.com. I'll be doing backtesting. I got a bunch of stuff. I've got some much more complicated models than I'm hoping to be able to make during that time period. But I don't know if I'll get that far. And I have maybe 3 or 4 videos I want to try and make. And this time around, hopefully we make them. Last time we got sick. Yeah, you got to boot those types. Well, if it becomes a problem, then we will. But okay. Later.